Welcome to the Real Investing Show with Tim Harridge. Each day, we'll provide real investing for everyday investors. Tim is a nationally recognized real estate investing expert, podcast host, and public speaker. He built his businesses from the ground up and is here to help you do the same. Here is your host, Tim Harridge.
Welcome back to Real Investing. This is Tim Harridge. I'm glad you stopped back by. Today, Ken writes, I've bought 3 homes over the last 5 years and refinanced one of them. Every time I get surprised by a higher interest rate than what I expected. When it's time to lock the rate, can you share any thoughts about how to ensure you get the best interest rate or how to better understand what interest rate to expect? Well, Ken, thank you for writing in. I would imagine one of the reasons you're getting a little surprised is you now have multiple homes, right? So many times when you have multiple mortgages, and mind you, I don't know the loan officer you were working with, many times they'll write it as a second home. Specifically, if the home that you're living in is your primary residence and you are buying the new one while you still own the other one. So often, different mortgage companies and different mortgage guidelines will make it where that existing home, that existing mortgage where you live at the moment is underwritten as your primary. And so the new one is a second home. And the second home, right, is going to have a higher rate. It's going to have different down payment requirements. It's going to have different debt to income requirements. It's going to have different LTV requirements. And then, look, rates are fluid. I tell everyone it's you really got to watch the 10-year treasury and understand that, rates move with that. And often there's different rates for second homes. There's different rates for investment property. There's different rates for primary residences. There's different rates for 15-year versus 20-year versus 30-year. I think since you're someone that has a bit of a more complicated setup now that you own multiple houses, right? The bulk of the mortgage market is designed for people that only own one house. So I'd tell you that you should be working with probably maybe a banker, someone at like Truist, which used to be BB&T, someone at one of the rate table lenders. That's like bank rate or oh my gosh. I've got buddies that used to work for me at B2R that do that. You're basically looking for people that can go out and bid. I think you work with a broker, honestly. I mean, I think you need to work with a good loan broker. Here in Dallas, you got Supreme Lending. You've got places like Lending Tree that can, get multiple people bidding off of you. If you're in the military, some of the credit unions, or if you have access to a credit union, not just military, teachers, that kind of thing. But for me, I think you have to understand that, your FICO is going to be very important. I think you have to understand that your debt to income ratio is going to be very important. And you've got to learn how to ask the right questions. I mean, you may want to talk to your lender and ask, hey, if I move out of this house and rent it out for the time being and then apply for the mortgage, then can I call this other one a rental and the other one and then get the owner occupied rate? And, some will say yes and some will say no. It's always funny because often when they say yes, they are saying yes, but they don't tell you that you need to have 6 months worth of rental income. So I feel like you need to work with a good mortgage advisor. You may want to get some of these houses out of your personal name, and not just out of your personal name, but off your personal credit report. Clearly we at RCN can help with that. But our rates are a little higher, but they're a little higher, and it's not on your personal credit report, and you can put it in an entity and really avoid some of the liability issues. So I think there's pluses and minuses. When I look at it, though, my short advice would be get with a broker or someone at a bank or a credit union, not like a Wells or a Citi or a B of A, because they like to originate their portfolio loans. I'm talking about one of these lenders that you have an established relationship with, where you can go sit down with someone and they can sell multiple products. I like poking around bankrate.com. And looking at the different ARMs and interest-only options and the differences in the jumbos and the fixed, because all of that, I think, Ken, that's what I would tell you to do. Hop over to bankrate.com and play with some of the calculators, because if you're looking at a jumbo, the rates are different. If you're looking at a owner-occ, the rates are different. If you want an ARM, the rates are different. So everything's different. Everything is different by scenario. So I can tell you that since you own 3 homes and it seems like you move a lot, I would imagine you are dealing with some of that. You've got 3 mortgages. They're reporting on your credit report. You're not buying a second home anymore. Now it's an investment, a first home, primary residence anymore. Now it's an investment property or a second home or a vacation home, and those are all treated differently. So hope that helps, Ken. Thank you for taking the time to write in. I know how much your time is worth. If you're out there listening and you need any help in real estate or real estate investing, hop over to ihavelunchmoney.com, submit your questions, and I will do my best to get to them. Thank you so much for spending time with me today. I'll see you tomorrow.
Thank you for hanging out with us today on Real Investing. If you have questions, comments, or feedback, please visit ihavelunchmoney.com. Tim can't wait to hear from you. We're always grateful for your reviews. And if you enjoyed this episode, please subscribe and share it with your friends. Remember, the business is the vehicle, not the dream. See you next time. The preceding program is provided for general education purposes only and does not constitute legal, tax, financial, investment, or other professional advice. No information contained in this program should be construed as financial, investment, or legal advice from any individual, author, host, or guest. You should always consult a financial advisor before investing.